It's the first day of the trading week and time for the Week Ahead interview, where we ask an FX insider for their pick of what's going to be moving and shaking currency markets this trading week. On the phone with me now is Dr. Vasileios Gkionakis of UniCredit. Vasileios, what for you are the items traders will be watching out for this week?
Well, I think there are two key events this week that markets are going to be focused on. First of all, is going to be the Bank of England minutes. This is very relevant, especially given the unusual publication of the statement in the previous BOV meeting. We expect the minutes to basically have a dovish rhetoric, and this is likely to weigh on sterling. The other event is going to be Bernanke's semi-annual report to the House, where we expect him to reiterate that QE tapering is going to be still dependent on data releases, but it is important to realize that U.S. payrolls have considerably improved recently, and as a matter of fact, we expect QE tapering to start in September. And finally, he will definitely emphasize that interest rate hikes are very distant into the future.
Markets in Japan are closed today due to a bank holiday. How is this likely to impact Japanese yen liquidity for the week?
I don't expect to have a major impact on the yen liquidity for the rest of the week, as today's price action in dollar yen and euro yen have revealed. The price action has been largely in line with previous days, so we haven't really noticed any noticeable change due to liquidity, so I wouldn't really expect any major impact on liquidity of the yen for the rest of the week.
The Eurozone's trade balance figure will be revealed on Tuesday. With news earlier this month that France, Europe's second largest economy, trade deficit continues to deepen to critical levels, are markets bracing for a second monthly contraction in this figure?
Personally, I do not think that markets will be too focused on this. I think as far as the trend is concerned, looking through the monthly volatility, as far as the trend is concerned in the current account balances of the Eurozone, there has been a marked improvement over the last 4 to 6 quarters. So by the end of 2011, we stood at the 0.6% as a surplus of GDP, and now we are running close to 2.5% of GDP. So overall, the current account balance in the Eurozone has improved, and I expect that to remain supportive of the euro in the medium term.
Pound sterling traders will also be keeping a close eye on Tuesday's UK inflation data. What figure do we need to see to spark a reversal in the pound's current downside trend?
Our forecast for UK inflation rate is at 2.9%, and consensus, I think it is at 3%. I think any number above 3.1% would be seen as quite sterling supportive.
This week we'll also see meeting minutes from the Reserve Bank of Australia, Bank of Japan and Bank of Canada. Can we expect any surprises here, do you think?
We don't really expect any major surprises. As far as the RBA is concerned, we expect that it will retain its dovish bias, leaving the door open for a rate cut, as discussed in the press release following the latest meeting that it had. And we expect that it will reiterate its view that the Aussie remains high. But all of that is already in the price, so I don't expect any surprises. We don't expect any surprises from the board either. We're going to see the minutes reveal that the bank sticks to its 2% inflation target, and the expansion of the monetary base over the next 2 years or so. As far as Bank of Canada is concerned, again, we don't see any major surprises. It will probably refrain from mentioning anything about withdrawal of excessive stimulus, especially given the fact that inflation remains low.
Vasileios, many thanks for your comments. Want to have your say on what you'll be keeping an eye on this week? Head over to the Dukascopy Facebook page and share your views. Goodbye for now.